Is the energy or is energy the trade for 2026? Is it the year of energy? Whatever way you want to say it. Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Vincent Deluard, Director of Global Macro Strategy at StoneX. Hey, Vincent. Happy New Year.
Happy New Year, Maggie.
Good to see you. We were chatting right before we came on air that it is sort of no shortage, rock and roll right out of the gate for 2026. We've got a ton of headlines, including as we close the U.S. session, a couple coming from Washington, but not so much on the sort of foreign policy front, which is what we've been dancing around for the last few days, but a little bit more domestically focused. President Trump, first of all, said that the U.S. would ban large investors from buying homes, which prompted a pretty steep sell-off in Blackstone and some home builders. Blackstone came back a little bit, but still weak. And then Trump also tweeted out that defense companies would be banned from stock buybacks and issuing dividends until they speed up production of military equipment. So we saw Northrop Grumman, Lockheed Martin, both down over 4%. I guess this is what 2026 is going to look like.
Yeah, I mean, I think it's another sign of this kind of policy activism shift towards almost state capitalism, if you will. We had the Intel buying stakes, and then we see more of it. I mean, so far it looks like the market really doesn't, you're down 2% on the day. I mean, not a huge deal compared to the runs that these companies have had before. But yeah, I mean, it's an election year. We have a president that has a kind of a low approval rating. I think the stakes are very high. So I think, we'll just, in typical Trump fashion, he's throwing a lot of things and seeing what sticks.
Yeah. And maybe start trying to prompt some, you never know, these tweets come. Is it real policy? Is it a trial balloon? Will anything come of it? And we don't know. Maybe an attempt to get the industry to move itself, kind of using the stick rather than the carrot. We did see this was already in place beforehand, but we saw a little bit of pullback from some of the indices that were leading and had done well. The Dow and Russell had been outpacing. They look like they gave up. The Dow, certainly the biggest gains of the day. NASDAQ, the only indices hanging on. Interestingly, the VIX is up 4%. It's still super low, but we did see a little bit of a pop. We've got payrolls coming at the end of the week. We've got a ruling from the Supreme Court. Does it feel like it's kind of risk off as we finish the rest of the week out here?
Well, there's definitely a lot of potential for volatility. It could also be both ways. I mean, the payroll, my expectation is that the payrolls are going to be quite good. What's the other thing that you mentioned towards the end of the week? You said
Supreme Court. We don't know, but it's opinion day, so you could get a ruling on tariffs on IEEFA. Same day as payrolls.
It's a low conviction, but I would be somewhat bullish on both. I think the kind of payroll labor market panic is kind of overblown. There was, as you know, I'm a big tax collection guy. So for the whole year, I mean, personal income tax collection were by 9% for 2025, which is remarkable. I mean, and there hasn't been a tax increase. If anything, it's so that's why I have trouble believing in this kind of slow economy. Robots are going to take all the jobs. Now, there has been a bit of a slowdown in December in tax collection, and my read on it is that it's mostly the government employees that were on the Doge, the Doge offers, they could keep for 9 months and finally they rolled over. So I don't think it's that big a deal. Yeah, my view is generally the economy is better than people think. If you look at job openings, for example, that's barely moved. I mean, we're still looking at 7 million. So I think the labor market is stronger than people think. So I would expect a slight surprise from that. And then on the tariffs, again, low conviction. It's hard to know, but my impression is that it's so. I mean, at the end of the day, the Supreme Court is a political institution, and the Constitution is quote unquote a living document. You can make it, interpret it in ways that allow you to go with the wins. And then the wins are, Trump was elected on a on a platform that promised tariffs, and unwinding this would be such a chaos. And eventually a worthless chaos, because you can always go back on the, I mean, it just takes longer, right? But you can use a section, forgot the number now, 300
I think exactly 3 something is what was in my mind too.
So
You just have
why
to
would,
individually chase them and investigate. It's not a light switch, but
right?
it's the same way to
Why
get
would,
there.
yeah, why would you cause such havoc for something that eventually is going to come back, just to make a point? Again, I mean,
Well, a small point about executive order, the power of the executive branch, but
I mean,
let's not split hairs here.
we're kidnapping foreign leaders. You know what I'm
Well,
saying? Like, I mean, if you want to make a rule of law kind of argument, is the biggest thing, possible overstepping on tariffs, which, he has the authority to impose anyway, or maybe it is, taking people on the street without sending them to El Salvador, or taking foreign leaders, attacking NATO allies. I mean,
take your
I don't
pick.
know. I would not die on the battle of tariffs, but maybe that's just me.
I love it. Pragmatism spoken, which we always count on you for, Vincent. But fair point. Fair point. So you have had some great. I say this every time you're on. It's true. First of all, Vincent's notes are among the best out there, and you're not afraid to take a stand, take a contrarian call, and if it doesn't work out, say you're wrong. But you are making some for 2026, which is why I love catching up with people at this time of year, because everyone's tending to sort of look out, come up with an outlook, or at least a framework to operate off of. So let's talk about some of the things you're expecting, and you have some surprises for 2026. So walk us through a couple and talk to us about how convicted you feel about it. And we led with energy, because I think you've been talking about energy for a little bit as we turned the year back in November.
Yeah, so we had a report called My Highest Conviction Call Energy in 2026. That was in October. Back then, the argument was really that the supply glut was not as big as the market thought. That also you kind of needed energy from a portfolio construction perspective in case we had kind of an AI bubble burst or an AI surge, because at the end of the day, this is extremely energy intensive. So that was our report from October. And then we kind of doubled down in our December report called The Fourth Surprise of 2026. So that came out around Christmas time. And there I kind of took the geopolitical angle by arguing that there was a kind of geopolitical pivot in terms of Trump's strategy when it came to energy. It seems to me that the first year one of Trump was really twofold: sanctions on Russia to try to keep oil prices low, which hasn't quite worked, and then pressure on Saudi Arabia to make up for the lost Russian production to keep the markets well supplied. And we could see already by the end of the year that the administration was not too happy with this strategy. Right, on the Russia thing, the sanctions didn't work. Most of the oil ended up in China and India, so you end up really just giving your biggest adversaries discounted oil. And then on the Saudi Arabia front, these guys have budgets too. And $50 oil doesn't work for their budget. I mean, they need at least 70. They have all these stupid pharaonic vision like Neon, Google it, that the Line City, all this insanity that requires a lot of money. And then also the US energy companies were not happy. They were kind of left out from this strategy, right? Because that meant they were losing market share and the share was unprofitable. So the pivot, which we expected, would be, okay, we'll kind of lay down on Russia. We need to close the war. We'll give a break on Saudi as well, and then we'll turn our attention to LatAm. And my idea was that would be quite bullish for U.S. energy companies. Now, of course, I did not forecast the completely mind-blowing insane events of the past week, but generally speaking, you could see that a U.S. administration that's focusing on the American continent and really trying to squeeze as much as it can. I mean, it's going to flow through at the end of the day. Exxon, Chevron, and then also I would add the OFS, like Schlumberger, because it's significant investment that needs to be made in order to get this oil moving.
And so Babar asked, what's the thought on crude? And not so when we say energy, we should be clear because we've seen oil prices go down. So you're bullish on energy companies because they will be involved in the rebuilding and the ramp up of production. But is that a negative? Does that mean that it's a negative and that oil prices themselves, crude prices, will be lower? That's
Yeah,
what
I mean,
Trump
it's
wants,
always the
right?
dynamic with commodities, right? You
Mhm.
produce more of it, and at the end of the day, I mean, if it's not profitable, they're not going to do it. So, I, I think the market kind of got a little overexcited, especially you see on the Canadian oil names getting really plummet. I mean, it's gonna take some time to get this oil from Venezuela off the ground. I mean,
Mm.
we're talking about now almost 20 years of mismanagement, underinvestment, falling production. Also talking about a very hard geology. I mean, you go to Venezuela. I mean, you've seen these images right on the Amazon and the high plateaus, and I mean, it's a very difficult geography to drill. So the soil will not hit them, and the oil market, it's not like the stock market discounts the future, right? So you
Mm.
can see if you see something bullish that happens in 5 years, you see it in the price right away, which is why we've seen the energy companies re-rate immediately, while the oil has to be consumed, right? I mean, oil is kind of a toxic commodity. Like you can't like just hold on to it for 5 years. I mean, you can, but there's carry and concerns like that. So the oil market has to balance at the end of the day. So that's why I don't think the knowledge that maybe we got a couple million barrel extra in 4 or 5 years really matters all that much for today's oil price. So I don't think oil prices can dip much below where they are. They already, if you look at on an inflation adjusted basis, they're probably at a massive generational low. I think the kind of market kind of overreacted. The Canadian tar sand name got hammered. I mean, they have until like couple years, and it's not that hard. They can figure out. Canada also has the same geography as the US. I mean, they can sell to Europe, they can sell to China. They just need to set up some pipelines. So the whole idea that Canada is the big victim of this may turn out to be wrong. And then, of course, the big winner, which makes a lot of sense, has been the OFS name. I mean, you look at Schlumberger
Mm.
really running pretty hard. And I think that's the market realizing that, we'll need significant investment in drilling in order to get this oil to the market.
Yeah. Do you think that, I mean, as you say, this was your a sort of 26 call, and a lot of it happened the first week. Does that make you a little bit more cautious about some of these names? I mean, do they come back down to earth a little bit, or is there a pretty good runway now that they are working hand in glove with the government, at least for the services, which as Jeff is asking, won't they make money first before the end? Uh, Oil companies do.
Yeah, at the end of the day, we're moving more and more towards this kind of state capitalism model. I mean, I've been looking at the China market for a while, and then for China, the name of the game is you figure out what the government wants, and you buy the company that the government tells you is going to support, or the sector you've done that for, and you avoid the one that we're moving towards that model. And now you have the president who is literally like toppling other countries in order to give the oil to U.S. major. I mean, the oil does not go to the American people. It doesn't feel the strategic reserve. No, I mean, it's so, they still very cheap. You could see the multiple go up first. That's what multiples do
Mm.
typically, and then the earnings will come later. It's hard for me to think that the energy sector as a percent of market cap at this point is probably like 1 or 2% of the S&P 500. So if I look at the whole U.S. equity market, it seems a bit premature to think that energy is where we have a valuation problem.
Yeah, that's probably an understatement. So what are some of your other things on your 2026 surprise list?
All right. So the first was energy. The second was a deluge of Trump checks, and it's based
Mm.
on my macro view that the economy is much stronger than people think, and I kind of got a confirmation of that with the GDP numbers, which were gangbuster. and that gives fiscal space for stimulus. I know we all love to talk about, out of control government spending, but really there has been a little bit of fiscal contraction in 2025, especially if you look on a kind of a primary balance X interest. You actually had almost $1 trillion in retrenchment since 2023. So if you take the kind of a Trumpian perspective, where you obviously don't care about the deficit, you just care about getting reelected, you have some room. You have some room to play.
Does that run it hot economy?
Yeah, it's a running hot playbook, and I think we saw the first salvo of this with the military checks for Christmas. Second salvo will be the tax refunds. So because the OBB is retroactive, people overpaid their taxes in 2025. So we're going to get about $100 billion extra. Usually we get about $200 billion in tax refunds a year. That year, so it's going to be more than $300 billion come up on April 15. So that's going to be a good jolt to the economy. Then I have to think that the Affordable Care Act fiasco is going to have to be solved by checks, because it's just easier. If you can't do the hard stuff, you do the easy stuff, right? The hard stuff would be to actually try to control cost and talk about the waste and the abuse in the system,
reform,
which a lot of it comes from industries that are big donors to Trump, or the Democrats. I mean, it's bipartisan here. So yeah, I think we're gonna have to give people checks to make up for these hikes in premium. And then the third leg of that checkbook policy would obviously be the tariff checks. I do believe, like I mentioned before, that the Supreme Court will clear it. And I mean, one thing now we're seeing with Trump is that he says a lot of things, but he also does things. Like if he tells you, and we have the midterm, his approval rating is very low. He needs a win. He needs, and I think, you can see how he's moving towards different. So you could argue that Venezuela was kind of like a pro donor, big money, like it's like, what's the little guy got to win from our military adventures in Venezuela? Probably not that much at the end. I mean, maybe dead bodies and maybe lower oil prices, but I think it will mostly benefit the oil majors. So you kind of need the pendulum to swing before the midterm towards the base. One way to do that is checks. So I think we can, we had about $300 billion in tariff revenues last year. So it's about 160 million tax filing households in the US. We can do 2,000. There's the room. So
what is that? What does that do to inflation in the bond market?
Well, I mean, that takes me to my third surprise, which is hikes by the end of the year. When you look at the curve now, again, it's another area where Trump has been quite successful. Like he has gotten the Fed in line. Like he's bulling stuff, it really works. Now you have people who, where inflation hawks 6 months ago are writing papers to explain that tariffs are deflationary, which is like, you gotta, mind blown here.
So they hike even with his appointed.
No. So my idea is that in the first part of the year, now finally we kind of got all the ducks in order at the Fed, right? There was this kind of like, I think Trump won the Fed battle. The Fed battle fought in the fall, and he kind of got everybody, including Powell, on message that there is risk to labor market. Now, I would argue this risk is imaginary, but even former hawks are now buying this view that we need to cut, even though his inflation is 3%, because there's bigger risk to the labor market side of the mandate. So my idea is that the Fed is going to be somewhat dovish in the first half. Also we'll have, everybody will be competing to, be the pick, pick me. The best way to signal that is to kind of outdove the next guy. And Trump in typical apprentice fashion, he's, you see he's kind of playing, is it going to be Walsh? It's going to be Waller?
Come to my office.
Right. He keeps, so, he rate everyone, while he does that, everybody's kind of trying to up the stake. So we have my point is we have a very inflationary policy mix in the first half of the year, where we have a deluge of Trump checks, massive increase in military spending, still the capex boom going on with the 100% depreciation, and a Fed that's cutting in the middle of that. So really, we're firing on all cylinders. And we're coming from a GDP that was growing at 4% last quarter. So if we have all that, my idea is that we'll have a much weaker dollar and in a pickup in inflation, especially as I don't expect the tariffs to be reversed. So by the end of the year, I think after the Fed will be smart enough not to hike before the midterms, but then they'll have to kind of catch up with that. So by the end of the year, so that's where I would position on the curve. In the front, it's all about politics at this point. It's who's going to be picked, and I have no insight. I mean, it's going to be Hassett or Walsh or whatever. My guess is going to be Hassett, but it doesn't really matter. I wouldn't play in the front, but if you look at kind of December 2026 after the midterm, I think if we have maybe the euro at 1.3, inflation at 3.5%, and the midterms have passed, I think there'll be a window for the Fed to hike then.
So where do you see opportunity here? What are some of your other surprises? I don't know if where the opportunity is. That's usually what you're looking for.
Well, I mean, the first opportunity is I think stocks keep going higher. I mean, last time I was on the show, we kind of discussed this. It was amidst this November correction. We talked about 7,000. We're almost there. I mean, the first step is, I think the year played. It's a tale of two cities, right? A tale of two halves. The first year, the first half is quite good. Like we get earnings surprise, all this momentum, rate cuts. So maybe the stock market rallies another 10-15%. And then
everyone's so worried about valuations. Everyone's saying it's a bubble. It's a bubble.
Yeah, I mean, it's been a bubble for so long. As long as the earnings deliver, it can keep getting more bubbly. If we're talking, I mean, we have real growth of 4% right now. My view is inflation is north of 3. Again, I keep going back to this idea: personal income tax collection last year grew by 9%. So that should be kind of the baseline for nominal growth. Now, if wages are growing by 9%, profits are probably growing, high, I don't know, 15%. So you don't worry about valuation in this environment. So that would be the first half of the year. Now, my preference in the first half would obviously be things with more beta, more cyclicality, things that benefit from reckless spending in the US, which would be EM stocks, which had a terrific year in 2025, and I think we'll have a terrific year in 2026. And then by the second half of the year, the problem we have is that the economy is too hot. Again, it's always a matter, are we going to die by fire or are we going to die by ice? My idea is that we're going to die by fire. And at some point, the Fed will be a little bit behind the curve. And now we'd look like at the 2022 like scenario where the Fed is like, okay, the party has gone long enough. After the midterm, they have kind of clearance to hike rates. Probably the 2-year will feel that first, right? The 2-year will start rising maybe around, August. And that would make for a bear market in the fall. And then possibly, I mean, we'll have to see. But my view now is that this whole massive bull market, we have to start thinking about how this would end. I mean, it's been double-digit returns since 2009. This is the longest bull market in history, one of the largest as well. Indeed, we do have valuations that are historical highs. So you got to wonder, okay, what's going to bring it down? My one possibility is that it's going to be politics. We start seeing the pendulum swing to the left pretty hard. We see the Democrats win the midterms. Then we realize that all the Trump agenda, deregulation, checks, all that starts being put into question. We have a very dysfunctional politics, so the government cannot just step in. We have an persistent inflation problem. And as this kind of stagflationary mix develops in the 2027, that actually boosts the chance of the hard left in 2028, and that's how we end up with this kind of mega bear market, which would be the logical continuation of the mega bull market we had.
It's interesting though, because it's so hard to think about the right and the left making sense anymore, because you have direct payments coming from Trump. I mean, in some ways, it's already left. Like, you have this, sort of populist movement. So would it look different? Isn't every politician only able to stay in office if stocks keep going up? Or is this the kind of ascent of the non-asset class that starts to assert its political power, i.e. young people?
Yeah, I think at some point it would have to end like that.
Mm.
And that's why I view Trump as like a transitional president. I mean, um, it's a peculiarity of the US political system that in order to be elected, you need both the billionaires and kind of your Rust Belt voters. So it's always a balancing act. And of course, at some point, the interests of the two groups are orthogonal. I think Trump's genius was that he could bring them both by pointing out that there is this third group, foreigners, that we can squeeze. So I can give money to the Rust Belt guys without taking it from the billionaires.
He created a common enemy.
And that's, so we started with tariffs, and then he had some successes. I mean, the $300 billion are real. The inflation shock that, I mean, I'll take some partial L here. I mean, it hasn't been as bad as people have feared. Certainly on the growth side, it hasn't been bad. I mean, I do think the inflation is kind of understated, and it will be played out over time. But so far, so there was the tariff. Now there's this complete. Can we call that piracy? I mean, that would be seem to be the neo imperialism. Like we just take stuff from other countries. We'll see if it works. My idea is that it doesn't really work over time, and it's kind of hard. Colonial powers, usually the empire is costly to run. It requires competent administration, which I'm not sure we have. So then I think the next electoral cycle, we kind of realize that this third way of like just squeezing the foreigners is not a real solution. And
right, it's a red herring.
Yeah.
If even if you see a bull market for the first half of 2026, you're laying the groundwork, and many others are weighing in on this. It feels like we're at a tipping point or coming to the end of something and transitioning into something else. You just mentioned emerging markets. I know you look at the rest of the world. Is it time for people to be diversifying before we start to see cracks, diversifying into more international names, into other parts of the world, into other parts of asset classes?
Yeah, I mean, every time, for the past 2 years you had me on the show, I kind of made that case for
bang the table. You
gold,
do.
China, Brazil, Spain, and listen, look at last year. I mean, best performing markets where I think probably the major was Brazil. Spain was out there. Germany quite well. China performed very well. Gold, of course, was stunning. I mean, I would maintain some of these goals. One thing that I've added, somewhat kind of counterintuitively, is European fixed income. I mean, usually I'm not a big fixed income guy because I believe in kind of this great reset, high growth, high inflation, rise of populism, and I still do. But when I look at what happened with yields movement last year, I got to think that a kind of long Europe, short US on the 10-year is probably a wise bet. I mean, we basically had real yields go up by 70 basis points across Europe. France was partly political. Germany was a stimulus. We had a reform of the Dutch pension system that, caused some one-time flow. And at the same time in the US, we saw the 10-year fall by 50 basis points. So it's like, what could justify 100 basis point in real yield difference? So I could see, and again, if I'm right about the kind of Trump checkbook policy with a dovish Fed, that's very dollar bearish. Now, if you're dollar bearish, you always have to be bearish against what, right? And will China accept a revaluation of their RMB? Of course not. They would not. That would be a kind of a gift to Trump, right? So, all the Asian central banks, they always, cheat and manipulate their currencies. Japan is certainly not, looking for a much stronger yen. So the end of the day, the burden of the Trump policy is going to fall on the euro. So I could see a euro at maybe 1.3 sometimes next year, and then that forces the ECB to cut at the same time as the Fed has to hike. So if you are in
You
European
see the
fixed
reverse
income,
of that interest rate
you're having
differential.
a great year, especially if you're dollar based, right? You're getting like 10% on the currency, carry. I mean, if you could, yield are like 4.5%. I mean, 10-year yield is above 10-year treasury. So you get 4.5 carry, 10% on the currency, and then possibly cuts, which would kind of would have kind of a bullish deepener in Europe. So yeah, you could maybe make 15% in European fixed income, which I feel is an asset class that people have overlooked for the right reason for a long time. I mean, rates were
Well, it
zero.
looked like it was going to implode at one point. I
Yes,
mean, we had that, so
and I still think it's going to implode, by the way, but I just don't think it's going to implode next year.
yeah. So, and this is always important. I've been saying this like in every single show because it's so important because we're talking about these big structural changes that are afoot, it feels like. But then there are these other smaller, sort of shorter term cyclical moves within that people have to be aware of. I want to ask you real quick about metals. I know you have been talking about gold. That was a big call, but it's another one of these things. It's moved a lot. If you weren't in it, is there still room to get in it? Or do you feel like this is a little bit of a crowded trade right now and maybe we'll see some backing and filling and opportunities at lower prices?
Well, if you don't have gold in the portfolio, get it now. I mean, you need gold in the portfolio, right? Almost regardless of what short-term prices do. I mean, the more relevant question is if you had gold, let's say you had like, what I've been suggesting for a long time, which is, kind of replacing the 60-40 portfolio with a mix of gold, inflation protected securities, and kind of short-term bank loan and things like that, so you don't get massacred by this high inflation era. Now, of course, the gold part of that 40 bucket now is huge, right? So the question is, do you take profits? Do you reallocate into crypto? It's an interesting year, right? You get gold up a lot, crypto down at the same time, and there might be a trade there. But in general, I kind of remain bullish on gold. I mean, there's no the same thing with crypto. There's no way to value gold. So how can you say something that you cannot value is overvalued? It could, again, you have to look at what drove the big gold rally last year. Why it's this kind of geopolitical premium. Does the world feel like a safer place after the first week of January? I would argue not. Does it look like the dollar? Because at the end of the day, gold is kind of a vote on the dollar, right? Do we believe the US dollar will, provide stability and reliable returns and then a good home for the foreign currency reserves of exporters? Probably not. Do we think that, the Fed has successfully won the battle against inflation? Probably not. Do we feel like the Fed is going to hike rates to slow the economy? No. So, yeah, I would maintain the goal. Maybe don't add it if you already have it. Just sit and write it.
So you did a huge, great bit on China, which we're going to talk about next time you're on because we can't squeeze it in here, and there's so much to discuss there. Blind Squirrel just joined the chat, and I know he's been thinking about LatAm a lot, writing up some great pieces on Substack about that. So, you talked about emerging markets, but do you feel even more bullish about LatAm given what's happened? Are you a little bit more cautious given the fact that the president himself is talking about a Don Rowe doctrine? What are your thoughts on LatAm here?
Well, generally, I think I would want, again, I've been bullish for many years. And many other things, I mean, you could say, well, many of the things that I thought were going to happen already happened, right? We had the political winds first turn in Chile, in Argentina, and then in November, Chile went there. Commodity prices are rising. The U.S. is, I think this kind of like our continent view is actually quite bullish for that time. It means that the LatAm is going to be what Europe was in the 20th century, which is kind of benefiting from being part of that US bloc. I think you still have, commodities. So overall, I maintain that bullish view. Now, one thing that worries me a little bit, but we'll have to see how it plays out, is the big election in LatAm is Brazil next year. My base view is that, the right or the center right was going to win it. People are kind of tired of Lula. You have this continent-wide shift. Again, so we had Argentina, Chile, Peru, Colombia looks like it's going to be next. The only problem is this kind of like down road doctrine, like you said. I mean, it helps a lot. Like I think Lula and Petro are very, very happy about this, because there is that kind of anti-gringo rhetoric that helps the no one wants to be a colony, right? So it could be that Brazil underperforms this year. I wouldn't be surprised. It's maybe we take a little bit of a break there.
Yeah, something to watch. Vincent, it's always such a pleasure to catch up with you. You've got your eye on the whole world, which is, I think, going to be so important in 2026. So glad we were able to get you on at the beginning of the month.
Always a pleasure.
Thank you so much. We'll see you again soon. Thanks, everybody, for the great questions in the chat. It's going to be a heck of a week. We'll be back with Dale on Friday for the residency. It continues, so roll up with your questions. In the meantime, take care and good luck out there.
Bye, Maggie.